Welcome back, humble traders. Today I'll be doing a technical breakdown on the Seng Index, ticker symbol HSI. If you're new to the channel, remember to take a second to give the video a like and subscribe for more charting and price manipulations. Do know that I'm just a humble chartist and I do not provide any buy or sell calls. Instead, I focus on the potential traps laid out by the market makers. Always remember that the stock market is never obvious. It is designed to fool most of the people most of the time. Without further ado, let's take a look at Seng Index. Currently, the Seng Index is open and close to lunchtime. So as you can see, we did had a very strong gap down today, about 3 to 4%, almost coming to 5%. In fact, we are already below the March 2020 lows of the COVID crash. So that is really a concern. However, I would like to take a look at this particular point, which is around 21.1K. So you can see that in the event that the support is at 21.1K, so what these market makers would intend to do is that they would potentially try to find the stop losses of retail investors, which is probably just below 21K, about 20.8K to 20.9K. So that's where most majority of the retail investors may potentially put their stop losses there. So you can see that in the morning, just about a few hours ago, we did hit about 28 to 29K, 20.9K. So if the majority of the retail investors actually cut their losses there, then potentially we may see a short-term rebound coming soon. However, I would like to see a more buying interest in the afternoon. So in the event that there's more buying interest, and then we can have a candle which is similar like to the one that we had in March 2020, something like this. If there was like an initial flush, but yet we still close quite well above the bottom, that's an indication of price action manipulation. And likewise, if we are able to close high today, perhaps somewhere in between the gap, somewhere here, if we are able to close around these levels, then potentially we may see a quick rebound in the upcoming sessions. However, if we close below this 21K level, this 21K support, and then there is still selling pressure in the afternoon, then potentially there may be more downside in the upcoming sessions, especially due to the uncertainty having now in the Russia-Ukraine war, and of course the tech stocks in US. So if the event that this 20.8, 20.9K support does not hold, I'm actually looking at sometime in 2016, where we actually saw some support here. So in 2016, as you can see, somewhere in May, there was some strong support here at about 19.5K, 19.4K. Furthermore, if you were to zoom in, you will realize that there was actually a gap here. So this gap may eventually be closed at around 19.4, 19.5K. And this acts as a very strong support. Definitely 20K will be a psychological support, but in the event that we reach those levels, I believe that we may potentially break it, because once again, retail investors will be putting their stop losses just below 20,000, like similar to the one that we had in today's, just below 21K. So we just can hope for the best, and hopefully the buyers come back in the afternoon sessions. And if there's any changes, I'll give you guys an update. Thanks for stopping by, and don't forget to subscribe, as you'll keep the uptrend on the channel intact. Leave in the comment section below on your thoughts on this particular index, or if you have any other stock TA requests. Till we meet again, appreciate the manipulation.